Global stocks and riskier currencies are falling this morning after Donald Trump sent letters to Japan and Korea setting tariffs of 25% from August the 1st. And the RBA is expected to cut rates later today. That's coming up in our 5 Things in 5 Minutes on Tuesday, July the 8th. And then in our deep dive interview, ANZ's Chief Economist for Greater China, Raymond Yeung, takes a closer look at the idea of stablecoins issued in Hong Kong as a way for China to de-dollarize. He's sceptical.
China doesn't need to have the yuan stablecoin to be or so-called de-swifting, because China has already had this CIPS, this is the China Interbank Payment System, to support renminbi-based cross-border transaction.
But first, in 5 and 5 with ANZ, Donald Trump has sent letters to South Korea and Japan this morning notifying them of blanket 25% tariffs from August the 1st. That's virtually no different from his April the 2nd Liberation Day announcement, dashing hopes that negotiations might soften the blow. In fact, for Japan, it's an increase from the 24% announced that day. US stocks fell, as did more risk-sensitive currencies such as the Kiwi and Aussie dollars. They were already down after Trump threatened an extra 10% tariff on any country aligning itself with the, quote, anti-American, quote, BRICS countries. That's Brazil, Russia, India, China, and South Africa. In their cases, that's on top of the around 30% he announced for them on April the 2nd. Here's ANZ economist Bansi Madhavani this morning.
As we head into these last few days ahead of 9 July deadline, volatility is likely to remain high. We expect a flurry of news about potential deals, with a likelihood that interim arrangements are announced or extensions are granted. What that means is that the tariff uncertainty is unlikely to be resolved anytime soon, and the financial markets are bracing for this volatile period.
As of 4 a.m. Sydney Melbourne time, the S&P 500 is down 0.9%, the 10-year US Treasury yield up 7 basis points to 4.39%. Gold was down 0.2% at $3,339 US dollars an ounce, while West Texas Intermediate futures rose 1.1% to $67 US a barrel. The US dollar index rose 0.3%, the Aussie dollar was down 0.8%, holding on to 65.00 US cents, and the Kiwi fell 1%, also holding on at 60.03 US cents. Number 2, the Reserve Bank of Australia is expected to cut its cash rate by 25 basis points to 3.6% at 2:30 Sydney Melbourne time this afternoon. Here's ANZ Head of Australian Economics, Adam Boyton.
The most recent monthly inflation data do suggest that inflation is around that midpoint of the RBA's target band, so that's encouraging for the bank. But it's really signs that the previous uptrend in consumer sentiment confidence has stalled and that we're not really yet getting the lift in consumer spending. And for the Reserve Bank, the bigger risk at this stage is probably waiting too long for the consumer to pick up and not easing in order to give them that help.
Number 3. So what happens next after the RBA cuts later today?
I think the labour market dynamic suggests that the prudent thing is then to pause and assess the impact on the economy and the consumer of the easing that we've seen over 2025 to date. So I expect we'll get one more rate cut in August, and then the bank will pause to see what's the impact of the 100 basis points cumulative then of easing that we've seen over 2025.
Number 4. Indicative of that stronger job market in Australia, ANZ economist Aaron Luke reports the ANZ Indeed job ad series rebounded 1.8% in June to a 12-month high after 2 months of falls.
Look, the labour market is still tight. Our own ANZ Indeed job ads is still 16% higher compared to the decade average. Unemployment rate has also remained at a low 4.1% as well. So the strength of the labour market plus the fact that household finances generally look solid means that this easing cycle will likely be shallow.
Number 5. OPEC Plus announced an acceleration of its production increases over the weekend, adding 548,000 barrels a day in August, up from 411,000 the previous month. It's also up from initial plans earlier this year of just 138,000 barrels a month. Here's ANZ Senior Commodities Strategist Daniel Hines.
They're trying to essentially unwind this 2.2 million barrel a day production cut entirely before we see the end of the seasonal peak in demand in the market. And it's really a race against time, I suspect, to get these barrels out while they can, because there's obviously a lot of uncertainty around the global economic outlook with the trade war that the US has triggered with a lot of its trading partners.
Daniel Hines there. Now, in our deep dive interview, ANZ's Chief Economist for Greater China, Raymond Yeung, has taken a closer look at the idea of stablecoins issued in Hong Kong as a way for China to de-dollarise. He's sceptical.
To me, it's a way to mobilize the offshore renminbi pool, currently close to 1 trillion renminbi of the CNH deposit in Hong Kong. With a new product, this type of stable coin issuer need to set aside some reserve funds backed by some renminbi instrument. Ideally, if they follow the model of the US, DT or USDC, then they need short-term securities, ideally CGB or CDB, the sovereign bond of China, in order to back as a one-to-one backing to the stable coin. The ideas of stable coins obviously a way to reduce volatility compared with other cryptocurrencies. This is still a very controversial instrument. For example, the Bank for International Settlements, BIS, has wrote a paper, pretty high-profile paper 2 weeks ago, about how they see stable coins. And they definitely don't see this as a proper form of money because of three different requirements of the economist at BIS was saying that they see this a proper form of money requires singleness, elasticity, and integrity. To me, the major problem for stable coins or other cryptocurrency is integrity. How will the regulator to track the transaction for the AML or financial crime requirement? So this is still a very big hurdle for cryptocurrency to be a proper form of money.
So is there a chance China could jump onto this Hong Kong stablecoin issuance to issue renminbi-backed or yuan-backed stablecoins to help with the internationalization of the Chinese currency, so a de-dollarization?
I think there are a couple of issues here. First of all, if China want to de-dollarize, what they need is not a yuan stable coin, but they need to buy more. Like, for example, Hong Kong dollar-backed stable coin or other currencies rather than the renminbi, right? Because they're not going to use the foreign reserve to buy back renminbi. That's not workable. The other way is SWIFT, is the payment. I think this is the core issue of the issuing of stable coin, is a way to transact or to support cross-border transaction in a digital network or blockchain network without using SWIFT. This will be a way for China to, again, can use either the Hong Kong dollar stablecoin or a US dollar stablecoin for transaction. Now, of course, China doesn't need to have the yuan stablecoin to be the so-called de-swifting, because China has already had this CIPS, this is the China Interbank Payment System, to support renminbi-based cross-border transaction. And also for the retail transaction, the Chinese government has already launched the eCNY, which is a proper form of central bank money. We call it CBDC, central bank digital currency. That is also blockchain-based, that is also supportive to cross-border transaction, especially for tourism and retail trade.
And then there's Alipay and WePay, which doesn't need a stablecoin. So what's the real limit for internationalization of the yuan? Doesn't the yuan itself need to be globally accepted?
Whether the world accept renminbi depends on how they see renminbi as a commercially viable, and also the economic motives matters more than anything else. For example, cyclically, if the renminbi is a good currency for carry trade, they will use it. If the renminbi is a high yield currency, they would like to invest in it. Structurally speaking, if China as a supplier have more say in terms of the pricing in renminbi, that will also promote the renminbi as a global trade currency. But that is obviously not because of advancement of a payment system.
Raymond Yeung there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, July the 8th. Catch you tomorrow with all the detail and reaction to the RBA's decision at 2:30 p.m. Sydney Melbourne time today. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.